We did. All right, what's up, guys? It's Sheen Trades with TraderLink, and today we're going to be doing a market overview. And pretty much just going from there. I think today was a picture perfect day. I think all the things lined up very well, and as well as the analysis lined up very well. So one thing, this was the analysis sent out in the morning, so this day could get interesting. Currently 53.20 and 53.25 is the GEX flip. There is some interest. There is some interest higher above that. So today could potentially lead to more uppies if 5300 ABS DGEX becomes solvent, right? By solvent, I mean disappear, dissipate, get smaller, right? Bunch of synonyms for the word solvent. If it doesn't, we may end up just going back down and being stuck range bound. Everyone, the vol reversion levels as well were sent out, and those are all labeled here, right? We're currently sitting in between S1 or R1 and S1. Usually the play for me is to wait to see if a reversion level lines up with a GEX level, and it did perfectly, right? So this was the reversion level. They're all labeled already, so I'm gonna get rid of this image, and then we can shrink this down for now. And this was the initial image, right? So let's go over why I figured out or how I figured out the range, right? So this stuff above us right here, this is why I was a little bit weary on going into shorts, right? We had some decent interest above us. However, there was this GEX flip right here. So without being able to get above this initial 25 wall and 5320 GEX flip like area, we weren't going to go higher. So for me, it made sense to go short there with stops above, a 5 or 15-minute close above 25, right? On SPX. On top of that, we had this, right? It is the magnet for the day, which is the ABS DGEX as we went over yesterday. So that's exactly why I was watching for shorts, right? We know the magnet for the day. We have a high probability short area for the day as well, right? So does that make sense so far? And once again, I just want to make sure everyone kind of understands what I was watching so that, I mean, how to get the same exact chart or similar chart as me, right? So I want to make sure you guys understand what I'm watching before going into it, going into labeling and whatnot. So if everyone kind of gets it, then if I don't see a no, then I'm going to move forward and continue explaining. Okay, I don't see a no, so we can get rid of this, and then we can get rid of this for now. So off the rip, right? I said 20 to 25 short zone. Why do I have this labeled right here? Right? Because number one, that's GEX flip, and that's the biggest wall at 25. So that's as far as I drew it up to, right? You can look at the coordinates, they're exactly done, and it's set up the exact same way as I've been doing it on stream or overnight. Not overnight. What do you call it? In these classes showing you guys the chart. And I didn't delete it this time just to make sure that I had it so everyone could see and basically see how I draw out, the data, right? So first things first, high short probability. Why? Because we have GEX flip and we have a big wall at 25. On top of that, we have vol reversion R1. So that's 3 confluences off the rip, right? And you always notice that I only take these trades when there's 3 to 4 or more confluences on top of that. Usually 2 is kind of a little bit lower probability, but I tend to like those 3 to 4, maybe potentially even 5 confluences. So as of right now, right on the chart, you can already see 3. We have the GEX flip around 53.20 and 53.25, and a big wall at 53.25 all the way up here, right? On top of that, that's the vol reversion that we had charted out from the levels I send out every morning. So that's 3 things. On top of that, here's the other 2 that I had been watching, right? This was super key to what I was watching, and it was the hourly on the on ES. Number one, there was this. We had a fair value gap here, adding to the confluence. And then on top of that, if you take the overnight high down to the opening low or overnight low, right? Was it overnight? No, yeah, it was overnight low, down to right here, right? So now we have 5, right? We have the GEX flip at 53.20, the high probability get positive GEX wall at 53.25. The third thing was the vol reversion level. Now on top of that, we have short fib for the fourth one. On top of that, we now have a daily or an hourly fair value gap. So that's 5 things. Not only that, right? Here was the 6th thing. So if you go back and take a look, there were equal lows, and I've talked about this many times, right? Not this candle, sorry. This candle right here. Equal lows on ES. So that is 6 things today in order for me to go, or in terms of confluence, to go short. 6 different things, right? That was more than Monday. That's more than Tuesday, right? So that's 6 different things for me to have confluence to go short. Confluence, conviction, whatever you want to call it, right? 6 things today. So I was heavily into this position, and I'm very happy that it played out exactly as planned, right? So it just worked out. There were 6 things, and all 6 led to pointed to downside, right? If we go back to SPX here, these were the entries. These red lines. The initial one was half position. This one was as we got closer to vol reversion, R1. That was the full ad. And then we caught this play all the way down to those equal lows on ES, right? That was the main play. I don't know what that translates to on SPX. Let me pull that up. Change this, do this. So that was roughly about 53.10 on SPX, right? A little bit above 53.10. So we caught a decent move on that play. It wasn't a crazy move. I think it was 2.62 average to 3.05 or 3.1, something like that, right? So, and once again, right, we all know that in the money contracts aren't going to net you a crazy percent return, right? So the next time we got back into the same short zone, I was like, you know what? I still see 5,300 on ABS DGEX. So I have a feeling that we have good chances to potentially tap that today, right? So as soon as we pushed up, let me squeeze this down. I think there was SMT at these highs as well, right? Yes. Wait. Yeah, SMT at these highs. So before that drop, right? Right here, SMT, right? ES took out that high and NQ didn't, right here, right? So when I saw that, I was like, okay, I'm going to take this entry then. It just makes sense. On top of that, we're right at the short zone, so I took the entry, right? First trim was down here. Next was all the way, let me pull this bigger chart up. Go back to SPX. Take off this because we're looking at it. Next one was vol reversion. What's it called? This one lined up relatively close to S1, so I took it off the moment we tapped it. The next trim and full exit was vol reversion S2. Why did I take it off at vol reversion S2? Because as you can tell, there's one more label here, de-adjusted flip, right? So if we go back to we can go back and look at the video and then see what that looked like right here. This, I know what it looks like because what it actually looked like, because we don't have the split chart here. It looks something like this. This was positive, right? As you can obviously tell. And then this was a negative one like this. So there was a flip right at 53.05 and the slash 5,300. So that's why I took it off full at that area, right? So that's pretty much the reasoning as to why I exited there. This is also negative right here. This is a -1 right here. This is a -1. So it went all through those negative levels, right? And as we talked about, what does negative exposure act like from yesterday's class? Can anyone give me an answer? Acceleration. Thank you. Thank you. Right. And this is a picture perfect situation, right? Not oftentimes you get picture perfect, but after yesterday's class, this was a perfect example of it, right? Look at how we fell through all those negative GEX levels, right? Does the analysis from today make sense? Is it all kind of piecing together slowly the more often we do these? Perfect. That's one yes, and that's all slowly. Yeah, it takes time, right? I'm not gonna sit here and tell you like, oh, you're gonna learn this shit overnight. No, that's not how it works. This takes time, especially when you're learning something as convoluted as gamma exposure, right? There's more to it. First time I'm following on. Thank you very much. I try my best. Yeah, I mean it's the same. So actually we actually just opened up a trader link what do you call it, analysis channel. So that's where I'm going to be posting that. And I'm going to Gio's going to help me set up a bot that'll just automatically post it in Zach's Discord. So I don't have to, because it's hard copying pasting. Sometimes I forget. Yeah, Smitty's right. You can't buy screen time. You got to just stare at this shit. You got to spend the time to learn it. It's not like it's going to come overnight, right? And also I sized a lot lighter today. There's a very specific reason for that, because the contracts were obviously higher volatility due to minutes at 11. right? And Nvidia earnings coming up tomorrow, so contracts are more expensive. Usually when you enter in the money contracts, that break even price that I have calculated is break even by end of day, right? And usually when you enter in those in the money puts or calls, usually you're 5 to 10% above your I guess end of day break even price. Today when I entered, I was by the time that shit would hit, if it hit end of day and we just didn't have this drop down for me to sell out, I entered around like a minus 30% by end of in comparison to the end of day break even price on SPY. So that's why I was like, okay, when the moment I noticed that, I sized lighter today. Um, right. So half size here. Then I added into this one, and then we got the full exit down here, stops and profit on the runners, thinking that 5,300 would come, right? But ultimately got stopped out in profit here, and then re-entered when we got to this area again. So for me, it's just once again understanding the day that you're in, on top of right. There's a lot of people who obviously sized relatively large today or picked different contracts, whatever the situation may be. Um, but yeah, I had 530. What puts did I have? I had 533 puts. So once again, right, your 532s. What was your percent average in total gains? Today on the account, the percent return was a 4.2%. On the account. Oh, but fuck. I haven't checked my main account since Nvidia. Oh, on the cons, they went. I think the average was like 20%. Hold on. Nvidia today at the close. I'm so happy I didn't sell calls at the end of the day. That's not it. Positions. What does it say Nvidia's prices? Nvidia 1,017. Yes, Nvidia's above 1,000. I'm so happy on my long term. Finally, that position's worth over $200,000. But yeah, my average percent return was like my first entry average for these two, because this was a size, the second entry right here was a size in. That one was 2.62 on the contracts average, and then the average exit was like 3.05. And then this one was a 2 point, no, this one was 2.57, this was 2.62. And then the average exit here was like 3.2, 3.4. So two solid trades overall today. Right. Once again, you need to understand as a trader, you're not here to capture the entirety of the move. If you are, you're going to be bag holding all too often, number one, and you're going to be losing all too often, number two. Right. You're here to you understand that you're here to capture a piece of the move, right? Obviously, it can either continuously run, but there's one saying that a lot of people know that I always say, right? And obviously, there's newer people in here, but would you rather have the pain of regret or the pain of discipline? Because no matter what, every decision you make, you will have those two pains with every single decision that you make, right? The pain of discipline comes from trimming early, taking your profit early. And then once again, the pain comes from seeing that position ran further than what you exited at, right? The next one is the pain of regret. Shit, maybe I should have closed because I regret not closing the position because it turned on me and I got greedy, right? I rather go through the pain of discipline every single time. Think about that when you're making decisions while you're trading, right? Would you rather miss the move or enter early or enter too early and get shit on, right? You missed the move because it didn't come to your parameters for your entry, right? Once again, I choose for the pain and discipline every single time, right? Because if once again, it's just something to consider and think about when you're trading. Thoughts on waiting for the exact number to hit? No, never. When to me, never, literally never. I personally always take a relatively early entry, and especially knowing that in the money contracts you go through very, very little drawdown and you can hold longer, then yeah, I always take I don't mind a what do you call it, early entry. Does that make sense? That's just me. Holy fuck, crypto's running. Thank God. This is the first ever crypto run that I've ever gotten into. So it's kind of nice to see. But yeah, any questions, guys? Would be a fair stop loss for in the money contracts? It's not about a percentage, it's about a level, right? My stop was a 5 or 15 minute candle close above 25, right? If we got that, then I would have just closed the contracts for a loss. But we didn't get that. So use levels, have a defined stop loss in terms of your levels, right? Because in the money contracts, you don't need a percentage. You don't need a percentage. It doesn't matter whether you're not dealing with theta, you're not dealing with IV, right? Because if you have in the money contracts, then the odds are that you can just play your levels, right? Versus an out the money, then you're worried about a couple things. Class was not posted yesterday. Can you show a feature? Can you show the feature on your dashboard that has the green support resistance zones? This doesn't come from the dashboard. This comes from, well, technically it does. Um, Whoa, why is it glitching out? But this is me drawing it. This zone came from that 5320 and 5325 Gex flip on the analysis that I gave this morning, right? There's it. That came from this. This is my short zone. Yeah, this is where the levels are. These are the reversion levels that it's coming from. So that's the feature that you're getting that I sent that we've been beta testing, and these give you those levels intraday wise, right? Obviously, and as you take a look, these levels work. They're all within tolerance, right? 5323.92. The high was 5320, so we came within less than $1 on one of the vol reversion levels. The next one is once again on this bounce, we came within once again less than $1, right? When we got to close below, look what happened. We ran to the next one. And guess what? Even the next one, we got within less than $1, right? And then the next level, look, no close below. So we didn't run anything else. We didn't run lower. We get a close below, we ran lower, right? So just similar situations on how to treat or how to trade support and resistance. It's just you don't have to calculate or you don't have to chart your own support or resistance. This will give you support and resistance for the day, which is the beauty of it. You don't have to do anything. You have your levels for the day, and that's pretty much all you need, right? You don't have to go in and do all the extra charting shit that most people do. You wake up in the morning, you look at the levels that are sent out or that'll be produced on the dashboard once we release the module, right? And then you go into the gamma chart and then you do your own analysis on the gamma chart, right? So the analysis on the gamma chart is this is the one that I sent out in the morning, and it's pretty much you just go through, okay, big level 5325, big level 5300, right? We have some potential pickup above, right? And so there is a potential for the upside. However, when you look at this, you have a 5300 big level, and that's the magnet for the day. Everything else is pretty much negligible in terms of comparing how much bigger this is, right? And this is just the net version is just a mathed out version of this. It just takes the sum of those and then plots it on a different chart. And as you can tell, once again, 5300 is the biggest level there. So it's simple, but also difficult because you have to look at it enough to be able to recognize it quickly on the fly, right? If things change, I know what will happen. Short zone from Sheen, Gex, flip, Sheen. Short zone from Sheen, Gex flip from the dashboard. Yeah. Short zone is just from the dashboard. It's just drawn out, right? Why? Because that's the Gex flip right here. That short zone comes from this. It's the 5320 strike and 5325 strike right here. So it still comes from the dashboard. It's just visualized on the chart for me, right? Or that's just how I visualize it on the chart. Why we ran through red Gex? Because negative Gex acts like an accelerant. No, I don't do any alerts. These are just for you guys to, I put out the analysis, you take it for what it is, right? I don't want the responsibility of giving out alerts. That's, we used to do that, but then again, we realized like number one, I don't want the responsibility of that. I'll throw out what I think of the day, you take it for what it is, and that's the analysis that comes into it. Because the whole point, I mean, this is just my opinion on the whole signals thing. I think it's much better to learn for yourself, learn and create your own edge in the market than rather to follow someone. Number one, it's more sustainable. Number two, you're not relying on somebody. I hate having to rely on people. Can you explain what Gex Flip is? Is it top barred, top barred exposures? Can you explain how you use Vaughn exposure? So when it comes to Vaughn exposure, the reason why I haven't touched on it this week is because this is post OPEX week. So this is what's called the window of weakness for Vana and Charm. So those flows from Vana and Charm are less impactful on the week after OPEX. During OPEX week, that's when they're the strongest. That's when I pay closer attention to them. But as for the week after OPEX, I don't give a fuck about Vana. Personal opinion. Could not give a flying fuck about Vana. But we're gonna go into Vana exposure next week. That's it. A perfect. It's like having the passenger telling you how to drive. Yes. You can alert the price on trading view when it crosses. Yes, you can do that. What time frames do you usually like for equal lows? 5 and 15 minute personally. What's the difference between hold on. What's the difference between left and right charts? One is the raw calculation of Gex, right? Why does this keep popping up? Okay. The left one right here, right? Let's split it into fourths, right? The top left one, this is raw split, right? The one on the right, top right, is delta adjusted gamma exposure. It's a less naive calculation of gamma exposure. Basically, it filters out a lot of the noise that gamma exposure provides with different calculations, taking into account volatility and overall delta. Gex flip is, yes, thank you. Matt remembers. I don't know if Matt is new or not. I don't think he is. If he remembers, unless he just remember he's new from yesterday and he just remembered from yesterday. If that is, good on you. It's basically when the dealer portfolio changes from negative gamma exposure to positive gamma exposure. And more often than not, dealers do not like it when their portfolios flip. Why? Because it changes the hedging requirement of the portfolio. Should newbies pay more attention to the right chart? Yes, my suggestion for newbies is to watch this de-adjusted gamma exposure, right? This is a little bit more because this will show kind of confusion, obviously, right? But if you, once again, you know someone like me, or you get to the same level of reading it, you can tell the most important is being able to read it on the fly and seeing which levels are solvent. Yeah, you can use Gex for commons as well, which is nice. Like something like NVIDIA with high options and like open interest or volume, then you'll be able to see gamma exposure for those. Especially on Friday. Yeah, Fridays are super great for what do you call it? Single name tickers on Gex. Why? Because that is it's ODTE for them at that point, right? That's when they expire. So then that's when then pretty much like those levels will be more well respected. Why do you sometimes take the range of the day from split and sometimes from de-adjusted split? How can I know which one is the correct one for the day? It's about, okay, think about it like this. If you see both of them lining up, then then you have very good odds that that's going to be the absolute defined range for the day, right? But something like today, where it wasn't defined, where it's kind of mixed, right? Why do I take the range from this? From when I'm using de-adjusted, right? And it lines up with split on raw, then I know that I have I have a higher probability defined range for the day. But Majority of the time, I use de-adjusted not just for the range of the day or not for the range of the day, but more so for the magnet, right? The biggest bar on de-adjusted is called, and we talked about this, it's called absolute de-adjusted gamma exposure, or absolute DGEX, right? Absolute DGEX acts like what, right? I mean, I feel like everyone should know that by now. That was one thing that I always send out. Somebody answer me. What does absolute DGEX usually act like? Want to make it interactive. Magnet. Perfect. So it acts like a magnet for the day, right? So that's majority of the time what I'm using de-adjusted gamma exposure for, right? DGEX, absolute DGEX. It's pretty much, okay, where is the biggest magnet for the day? And then raw is more so a relatively defined range. It's, as you can tell right here, raw also has cleaner flips. De-adjusted does not have very clean flips. So once again, there's different, is the middle line significant? No, middle line is just this. It's the spot price. It's what SPX price is. That's just the SPX price. So there's nothing to that middle line. That's just what uh SPX is at every 10 seconds. Any more questions? Probably low priority suggestion for commons default deck should be weekly automatic. Yes, that's also true. Great class. Thank you very much. Try my best. And once again, you get for obviously all the OGs know I don't like to put out information that I don't use. So that's like my biggest thing about like trading is like there's so much information out there. What do you know is what do you know like is correct or how to use it, right? I only show shit and teach shit that I know that I personally use. I'm not gonna go out and teach other garbage. Other garbage is so useless. How would you break down this yellow line? Because it's hard to see which one is more steep. You can zoom out a little more and kind of that's how I usually do it. Right now it's after hours, so it's a little bit fucked. But if you look at this already, when we were down here, the move to the upside was much shallower, right? The move down even more was steeper. So the moment we got lower, let's scoot down. See, okay, here's the key difference, right? Look at that. As we're going lower, we're currently at 53.10, and then the downside is shallower right now, right? You can obviously tell the downside is shallower right now. So we're going to have a much easier time continuing to go down, right? So the next thing is that I want to see is what happens to the IV curve as we get below 5,300. And so right around here, right? Look at the IV curve steepen within a matter of seconds or minutes. See that? See that? Look at that. Look how perfect that is of an example, right? The left side steepens, so it's going to be harder to go down now. And look what happened. The right side shallowed up. It flattened out. And then if you look at the end of the day, what happened? What happened at the end of the day? We started pushing back up. We had a harder time going lower, right? Does that make sense? These sessions, as for right now, I've personally committed to a long amount of sessions. I fucking regret it because sometimes I forget, but it is every single day until June 18th at 5 p.m. PST. I regret it because this is a lot, right? Having to hop on every single day at 5 p.m., like especially after my entire day is already like from 6:30 to 2 o'clock. But we're here to teach, we're here to help. And we're doing it every single fucking day at 5 p.m. So after that, you'll probably never see me for the next like, no, I'm kidding. I'll still be active. But we'll probably do a little bit less and less of classes, given that, this is a big commitment. That means even on Fridays, if fucking 10 people decide to show up or 10 people want a class, that means my fucking day still on a Friday doesn't end till like 5:30, 6 o'clock and whatnot. Would you consider using average IV when looking at gamma? Does it play in your bias to taking calls or puts? If average IV on the top of the chart are calls, steep scoops are for puts, or am I overthinking it? You're overthinking it. Right. The most personally, I don't use average IV for picking out contracts and whatnot, whether to go call or put side for one specific reason. I'm trading in the money more often than not. I'm gonna end up winning, right? Probability is more in my favor picking in the money contracts. I mostly use it for direction, right? Okay, if we're sitting right here, once again, why number one, we have reason to trim, obviously our vol reversion levels, but if you go back and look at the data and you're like, okay, now I can tell that the side is steepened, so it's going to be much harder for the market to go lower, right? But and then so that may be an inference, be like, okay, maybe above 5,300, I can go long, or maybe I can long back up to 5,300, right? Depending on where we are. So, and that's due to just strictly because of the IV, right? That's more so a lighter probability play. Why? Because there's only that one confluence that I can think of, or two right now. You have ABS-D GEX magnet at 5,300 still, and then you have the IV curve a little bit lower, or shallower on the above spot price, right? So that's pretty much two confluences versus trades that you see that capture this type of move have six confluences, right? Does that make sense? Dude, 5 days a week at 5 p.m. every single day. Shoot me. Well, I guess it's different. Yeah, no, you're good, bro. Sometimes it's okay. There are certain situations like, yeah, overthinking it can be great. Um, but when it comes to trading, sometimes overthinking it, and I'm sure everyone can attest to this, overthinking it may overcomplicate whatever fucking situation you're looking at, right? Sometimes it's just not necessary. But once again, you have the arsenals all in your pocket. My arsenals come from a little bit of ICT knowledge, very, very minimal ICT knowledge. It's like fair value gap and SMT. That's really about it. And like equal lows, right? I have the Fibonacci retracement short ratio, long ratio, right? Next one is volume profile. That's one that I absolutely love. And then the next one is obviously Gex, Vana, reversion levels. There's so many different things that I use as of right now. But a lot of the times, one thing to keep in mind is that everything other than the ICT one is the data calculated, like it adds it's data. So it adds to it's how to put it? It's data driven, right? Volume profile is data driven. Why? Because it takes into account the amount of volume at per the price. Fibonacci is math. It's percent retracements of whatever move you have drawn out, right? So they're all data-driven decisions. And I stress that to all the traders that we've taught since the beginning is like every decision you make should be based upon data. I don't give a fuck about like candlestick patterns. I don't give a shit about that. That doesn't calculate the way the market moves. That doesn't give you reason as to why the market moves. It's data, it's volume, it's the amount, it's auction theory, that type of stuff, right? That's the type of stuff that will absolutely open your eyes to the market in comparison to utilizing, I don't know, a fucking bull flag, right? Guess what? Look at this shit. Oh, we're having a bear flag. Let's go lower. Get fucking bagged, dude. We went up. Sorry. Oh, we have a bull flag. Get fucking bagged round two, dude. Like, that's just my take on it. Bull flag this, bull flag that, fucking triangle this, triangle that, get bagged. Yeah, maybe they work out for you fucking 40% of the time, but this shit works out like 70 to 85% of the time, right? All you have to do is draw the fucking zones based upon the vol reversion and the Gex levels, and then you're fucking set, right? Because those are all data calculated for you. You don't have to do shit. All you got to do is draw like fucking 6 lines for the day, 7 lines for the day, and you're set for the day versus fucking drawing a flag. Sorry, I just ranted. Anyone who's teaching you about a bull flag or using bull flags for their fucking entries, I'm sorry, but get bagged, honestly. Clown emoji for them. Let me give them their clown mask. I'm sorry. Like truly, I will I used to use bull flags, so I'm one of those old timers from back in the day. I've been trading for 6 years, so obviously I used bull flags back then, bear flags, whatever. But absolutely get fucking bagged if you're still using bull flags in fucking 2024, right? If you're still using MACD, stand on this, fucking Mac on these nuts still. Like RSI, get clapped. Sorry, bud. Step away from those flags. Yeah, I visually see it. Don't get me wrong. I see them because they've been ingrained in my fucking head since the first year of my trading, right? So I see them, but no offense, like that's just not how the market moves. Yeah, you can see price signatures, right? And those can be okay price signatures, but your decision to take the trade should not be because of a bull flag. If it forms while you're in a trade, great, right? But if you're taking a bull flag breakout, bagged on God, bagged. Like once again, I'm not saying they don't work. That occasionally they do, right? Look at this. Oh, bull flag. We went lower. Congratulations. Oh, another bull flag. We went lower. Awesome. Right? Oh, we have a fucking I don't a bull flag. Oh, get bagged. We went lower. Right? Oh, bear flag. Oh, it worked around this time. Great. Oh, another bear flag bagged. Oh, bull flag. Great. It slightly worked out, but you got bagged yet again because you didn't sell. Right? Oh, bull flag. Oh, nice. We got a pump. Another bull flag forming, bagged. Like it's just so inconsistent. You get what I mean? Does that kind of make sense now? Like you can draw bull flag, bear flags, fucking I don't know, triangles, all like with every single pattern, with every single on a minute chart, right? I can go into here and start drawing fucking flags for you if you want, right? Like every other trader and give you information that everyone's gonna fucking that everyone and their cousin can fucking see. You don't need to pay money to know what a fucking bull flag looks like on a chart. One right here, bagged, right? Oh, bear flag, right? Bagged. Sorry. Oh, bull flag again? Oh, slight ups. Congratulations. You still got bagged because you picked shitty contracts. Oh, bear flag. Wow, it worked this time. Oh, but I got stopped out because it popped right back up after and I took it on the break of the flag. Come on, guys. Come on. Come on. Get over the fucking chart patterns. Put some like look, if you're gonna put in some time, you and it's to put in time to learning how to trade, and you think that this shit may be too complicated, go learn ICT for all I care. At least ICT fucking works. But it's just renamed. Like the one thing I learned was like, oh, LR is low resistance liquidity run, right? That's just a fucking bull flag. That guy's playing bull flags and he just renamed it LR, low resistance liquidity run. Come on. Turtle soup wasn't invented by that guy. It was invented by some other chick from like fucking the 1900s. SMT, Wyckoff method. Sorry, not ICT. He just popularized that shit. I'll give it to him. He did a great. He's a fucking marketing god. But his concepts are old concepts that do relatively work. Like, what do you call it? A fair value gap. Okay, if you want to see an interesting video, I sent this out to. It's like when fair value gaps without order flow is shit. Fair value gaps are like both is like knockoff order flow. Like it works. Like don't get me wrong, some of them work. Inverse fair value gaps they work, right? I'm not going to knock on them because I know they work. I've seen it work, but those are all order flow based still. Those are still order flow based. Oh, a volume imbalance, right? He calls a fair value gap a volume imbalance, if I'm correct, if I remember, right? This is the volume imbalance, right? But if you think about it, um, it's what do you call it? It said something along the lines of like, oh, market makers disagreed on a price, so it went down the other way. I think it's quite the opposite. I watched the video and it made literally the other day, and it made so much sense. And I was like, dude, this guy got kind of got shit on. Like, I personally, I don't even like Carmen Rosado, but shit, this video made sense to me. I was like, this is a good video. If anyone wants, like, it caught my, it actually made me interested in the video. So my suggestion, watch it on 2x speed. I have ADHD, so I can't sit in a place for very long unless I'm doing something that I like. Watch it on 2x speed. He talks a little bit slow, but the reason why I like this video is because it talks deeply into what moves the market, and it's auction theory. It's all auction theory, right? At a certain point, it's because there are more buyers and sellers, or there's more sellers and buyers. But that the ICT or candlesticks aren't gonna fucking show you that. Maybe the data can kind of. I mean, the data is based upon what's called true order flow, which is dealer positioning. That is quote unquote true order flow. Unusual options activity is order flow, right? Volume profile is order flow. Footprint chart is true order flow. So cons were more expensive after 9 a.m. PST because there was an upcoming forecasted scheduled news event. Correct. Normally ODT lose premium after 9 a.m. PST. Correct. You are right. They will, if you're out the money, you will lose a lot more because you have two things going against you. If you're in the money, on the other hand, the contracts aren't very, like today they were still juiced, but you're still not going to lose as much if you were to take, I don't know, 3K and all in the money versus 3K and out the money. You probably would have lost a lot more on during these choppy sessions right here. My suggestion is if you're trading the open, you don't hold from the open all the way to the end of the day unless you get super lucky with a fully directional day, right? Don't do that. You're gonna get chopped up. Yeah, unless the biggest difference is unless your contracts go in the money and they're deep enough in the money where their deltas are like 0.8 or 0.7, then they won't have as much volatility in terms of how much those contracts are moving. But yeah. Usually after 9 a.m. PST, I fuck off. Like around 8:30, I try to fuck off. Because if I know if I take a trade by 8:30, the odds are I'm gonna end up holding it past 9 o'clock AM, and I don't want to do that. Unless they're in the money, then I don't really care. Look at the trades from today, right? Not a single trade was after 9 o'clock, or I mean, during that 9 to 10 lunch hour. Can you show how to pull up SPX levels on SPY again? Yeah. So if you have the dashboard, hold on, let me refresh the page. If you have the dashboard, all you got to do is type in SPY. Oh, you mean on the trading view chart? It's this indicator. It's called SPY SPX ES price converter by PT Gambler. And then you can fuck around with the settings. So like once it's on, you just go into the settings. It'll automatically, you can check all of them if you want, but it's just not necessary. You can just have SPX or SPY. So if you're on SPY, right? And I want SPX, what do? You check off the SPX one, and then it'll populate. There we go. But with that being said, guys, I got no more. I feel like I ranted a good amount. You guys understand, like, look, there's good ways to trade, there's shitty ways to trade. But even though shitty ways to trade requires one specific thing, and it's screen time. Put in the fucking hours. Like sit in front of even if you're not going to take a trade in front, like during the day, sit in front of the charts, look at the price action, look at how the data changes with the price action. I didn't see Nvidia Gamma today. I thought about swinging some calls for Nvidia for the earnings. But I was like, I don't need to. Honestly, I have 200 shares already, and that was like 180,000 for 200 shares. So I'm like, this is so unnecessary to swing anything more or get in more. I figured we'd hit 1,000. Like, there's no way we don't hit 1,000. Like, in my head, it just made way more sense. Like, I don't need. Yeah, I already knew in the back of my head that okay, like we're gonna hit 1,000. There's no way we don't. We're fucking pushing all-time highs. Earnings, all they need is one like good earnings, and that was it. The fucking icing on the cake today was that they announced their stock split. So, or they announced a potential stock split, something like that. I don't fucking know. I didn't keep up on it. I just saw that I was up, but now I'm going to sell calls at the end of this week on Nvidia for next week. As usual, rinse and repeat. I didn't sell any calls this week or last week on Nvidia for this expiration because of earnings. not trying to get Omega slapped and have to sell out of my shares that I've had since like 400. 10-1 split. Oh, juicy, bro. 10-1 split. That means I'll have 2,000 shares of Nvidia. Gross. Gross. Pretty sure I even have more. That's only one account. I'm pretty sure I have them on both accounts. One, I think I have it on my dividend account because I just bought them. I have it. How can I get the indicator? I'm a year subscriber. You just type it in, SPX. Right here. Wait, which indicator? This one, right? I'm assuming. Oh, the volume. Oh, just type in, go into the main trade chat in TraderLink's Discord, and then type in, like go to the search bar and then type in OK guys in the search bar, or just go to the pin messages. You'll see it. Pin messages and just Liquido sent out that one, that Geo sent out a long time ago, but we just lost Geo's messages, so we pinned Liquidos's. Yeah. But yeah, anyways, we've been on for 45 minutes. I'm gonna end it off here. Thank you guys for tuning in. Hope you enjoyed the class. If you did, send out a tweet. We didn't get any tweets yesterday. I was kind of sad, but send out a tweet, tag TraderLink Apex, tag Sheen Trades. Say that you enjoyed the class, or that you learned something new, something. And I'll like and retweet it. And yeah, that being said, thank you guys for tuning in. Hope you enjoyed it. And as always, keep moving forward, guys. I'll catch you guys tomorrow. Thank you.